Hello, welcome to IVolLive. This is Jonathan. Today I want to demonstrate one specific strategy within the real-time spread scanner called Bear Diagonal Spreads, and I want to use Netflix as our example. The reason being, if we come to our IVolLive view here, I'm in IVolLive and I've got this tab for Netflix. And remember, now we have the ability to edit these tabs, so I can say Netflix, Bear Diagonal Spread, and now that's saved on that tab, so I know what I'm looking at, and the due diligence that I'm doing now. So I can come here. One of probably my favorite chart view is the 1 year chart. I just like how it's clean and I can see trends clearly. One of those trends that I've been looking at Netflix has been its recent uptrend here, which has since been broken. So the Netflix price, which is in blue, has fallen below this uptrend that Netflix was experiencing really since early March of this year. And so our legend here is we have price in blue, implied volatility in green, and historical volatility in orange. And what we could see is that implied volatility is increasing while price is decreasing, which makes sense. It's that inverse relationship. So this was one indicator that I was interested in maybe putting on a bearish trade, or at least using Netflix as an example for a bearish trade. The other thing I like to do when analyzing trades is I like to come in and just isolate implied volatility. So this is Netflix's implied vol, and I like to look at the trend. You can see that the implied volatility has been on this downtrend as Netflix has been on an uptrend, right? So here we go. So that's very illustrative. And then the other thing you could do, I like to put some technical indicators up against the implied volatility. In particular, Bollinger Band, Relative Strength Index. Here we go. So we see now this is the the Bollinger Bands around the implied volatility. With Netflix, I could see implied volatility is on the rise. Its RSI is on the rise. It's at these kind of rising and extreme moves, which tells me that Netflix is under some bearish pressure. So these are kind of a thesis of why I'd be interested in Netflix in the first place. And so then what we do is we scoot on over to our real-time spread scanner. When we're on the real-time spread scanner, we have a couple different ways that you can run it. You can see I was already looking at Netflix, but the way to get here is you choose your strategy, which in this case we're looking at bear diagonal spreads. Then you choose how you want to sort the information, et cetera, et cetera. The system will default to the most logical inputs and outputs. So you don't really need to adjust unless, 200 trades might be a bit overwhelming. So maybe we could say, let's look at the top 20. Then we come to the stocks tab, and we need to decide where do we run this strategy scan against. Do we do it against the S&P 500? Do we do it against the Dow? Do we do it against Indian stocks? What do we do? And in this case, if I was screening and looking for interesting trades, I might run it against the S&P. But in this case, I know specifically what I want to look at. So because I know specifically what I want to look at, I don't need to change any of these fields, right? I'm just looking at this particular stock. But if I was, looking to screen against a universe, then I would specify, the sentiment, the IV index. Do I want a cheap, normal, or dear? And then these other parameters. So then I come over here to the options tab, and my expiration date, I've got a short-term thesis with Netflix where I think it's going to go down in the short term, as this working example. And then for the moneyness, I'm interested in any trade our system thinks could be compelling. Risk reward, again, I'm going to leave that blank because I just want to see what the system comes up with, as well as Greeks. So hit search, and what we will see is the system's done all the math, and we can see the bear diagonal spread. So remember, we're here in a bear diagonal spread. And just before we go through the results, what we're looking at here is the name of the stock, Netflix. And then with a bear diagonal, what's different that with a bear diagonal than a bear vertical is on a bear diagonal, you're going to have different expiration date, right? And you're going to have different strike prices. So it's going diagonal. And what's happening here in a perfect world is we want the shorter term option that we're selling, we want that to expire worthless, right? So we keep 100% of the premium we earn when we sell it. And then we want the pricing action to really take off on the other leg of the trade where we're buying. So in this case, we'd want Netflix to close below $330 a share by July 21st. And then we would want it to continue lower, through July 28th. So that way, we could maximize the potential of both legs of the trade. And if we come out to something that's a little bit longer term here, so we have, an August 18th and a July, 28th expiration. And that's a few weeks apart. And you can see here, we want Netflix to close above 320 by July 28th. So that way we could keep 100% of this premium. And then after July 28th, we'd want Netflix to start falling to below 325 a share. So that's how to think about both of these legs. The reason why this is a powerful strategy is, instead of spending $224 to enter this bearish position, we're going to spend $224 minus 93, which is why our net outlay is $131. And then if you can see that here under capital required and position cost. And then if the Netflix moves, 2 standard deviations in our favor, so lower in this case, we stand to gain up to $595. Our risk is our net out of pocket, which is this 131 figure. And of course, we could lose up to 100% of that, which is why risk to capital reward is 100%. And then our max return is, what it costs us divided into what we could make. And so if we click on this and we come to spread details, we'll see some interesting things. Of course, the ticker symbol, we have our implied volatility, we have our different Greeks, and these are broken down per leg. We have our here where we can simulate our P&L. So, this expires, let's see, in August and in July. So what if we did 20 days on the time increment and then underlying prices by 10%? And you hit simulate, and this is like a mini kind of quick and dirty P&L. And it shows, okay, if Netflix price goes to X, Y, or Z, what over 20 day, 40 day, or 60 day, what does the net profit look like on the trade? So this is a very, very good way to come in and kind of gauge where you need the price to be in order to show the max potential profit. So that is, and then when we go back, if we like that trade, we could copy to our pocket. And let's say we like a few of them. Let's say this one, which is a bit more shorter term, this one, which is intermediate term, and then let's say this one, which is longer term, right? So we can copy to pocket, we can copy to pocket, and then where was our short term one? Copy to pocket. So now we have our pocket. We can save that. So that way, we don't lose that. If we have to go grab a coffee, go to lunch, go to a meeting, could come back and upload that back into the system. And if we want to create a watch list for Netflix in general, we could go Netflix, and we're looking at expirations from today. We think this downward move will happen by the end of August, let's say, as our working theory. And then for the strike price, you could do whatever range you want. Let's do 300 to 450 just to show how many options there are. Adjust this, and then you can see there's tons of options, but what you get here is you get the quote time, you get the underlying price, which is $417 a share, you get the IVX for Netflix, $45.49, you get the symbol, whether it's a call or a put, expiration, strike, delta. And so if we wanted to tighten this up even further, we could say, look, just show us, you know, to 420, 400 to 420, and look how much tighter that scroll bar gets, because we're looking at a much closer strike price range. And again, we have our delta, which is telling us how sensitive this option is to every move in Netflix underlying price. So for every $1 Netflix goes up, this call option will go up 89 cents. And then for every price or every $1 that Netflix goes down, this put would increase by 10 cents. So we have all of that available to us here. Again, we can save this monitor. And then let's say that we start a new session. We're over here, we were looking at our charts, but then, you know, we go to our real-time spread scanner, and let's say we had logged out, we needed to log back in, come here to Pocket, open Pocket, and we'd come to our downloads, Pocket, there we go. And here was those trades we were most interested in for Netflix for the bear diagonal spreads. And then monitor, we could do open monitor, come in here, and here's our monitor. And there we go. And this is the Netflix monitor we're looking at. So that's how we can kind of, you know, find our trading thesis on IVolLive, come to the real-time spread scanner, run some scans to look at trades that play along with that thesis, and then create a watch list for those names. And again, this was for a bear diagonal spread, which is right here. Oops, excuse me. Bear diagonal spread, which is right here. All right, this is Jonathan with IVolLive. I hope you enjoyed this video on bear diagonal spreads using IVolLive in the real-time spread scanner tool. Until next time, happy trading.